Thank you guys so much for tuning into today's live stream. It is June 5th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here for today. So we don't really have any I would say super important news. The only thing that I'm curious about is the unemployment claims, which they come out more than estimated, which was what was forecasted was 236,000 unemployed. The actual numbers are 246,000. So this right here is telling me that, hey, we have more unemployed people than previous month, and we have more unemployed than forecasted. It's not a good. It's not good, but I wouldn't say it's that it's not a drastic change, right? Not that drastic, I would say. But what did we see yesterday? So from using the news from yesterday as well, with the ADP non-farm employment change, we didn't get as much employed people as compared to previous and what was forecasted. Let's see. Yeah, the change in employed people was less than previous month and less than forecasted. So this month, or I guess last month, during May, not as, I guess the growth isn't there. We actually didn't grow in terms of jobs. I think tomorrow is going to be when non-farm, so we have non-farm unemployment change and the unemployment rate tomorrow. So this is going to give us some more information of where unemployment is. But yeah, so here non-farm employment change is the change in the number of employed people during the previous month. I don't know how this is different from non-farm employment change. ADP non-farm unemployment change. I'm gonna ask ChatGPT, what is the difference between ADP Alright, let's see here. So it says that, or what Chad is saying is that first, ADP non-farm employment change is produced by ADP, a private payroll processing company. It measures the estimated change in private sector non-farm employment. It excludes government jobs, so farming jobs, and non-payroll jobs. So non-farm payrolls, non-farm employment change. I'm assuming that's probably, I think that's the same thing, yeah. But the actual change in the total non-farm employment, including government jobs. So it includes private sector and government jobs, excludes workers, private household employees, and nonprofits. This is the most influential jobs report in the United States. So ADP is just, okay, so it turns out ADP is just an estimate of the amount, the employment change from last month, but non-farm employment change, the one that's going to be released on Friday, is the actual, and it includes private sector and government sector. Official survey-based data, and it's the primary labor market gauge. So interesting. So yeah, we'll see where that is. I mean, we've haven't really had I would say, a deficit here besides in 2020, but during the '08 crisis here, you can see that we did have a negative employment, which means that people are losing jobs, I would assume, and that's not good. Unemployment is a key characteristic of recessions, and '08, it makes sense because '08 to '10 it was a financial crisis, right? And the last thing, I wouldn't say the last thing here, but the next thing I do want to do is to take a look at some articles just to see what's going on. So, seeing this right here, so Trump bans citizens of 12 countries from traveling. So, yesterday, I believe it was around like, for me, 7:30 Central Time. There was news that got released about Trump banning citizens from 12 countries, and in like a partial ban, more like restrictions on 7 countries. It's I'm not completely too sure the cause of this. Maybe we'll get more insight on this during this article. So, President Trump signed a travel ban on 12 countries, banning citizens from travel to the United States. Citizens of 7 additional countries are barred from immigrating permanently or getting tourists. So, maybe these 7 citizens of these 7 countries could still come here to visit, but immigrating here permanently is not allowed, or still eligible for temporary. So it's like not as hard as the ban on the 12 countries. But yeah, President Trump on Wednesday signed a sweeping travel ban on 12 countries, largely in the Middle East and Africa, and introduced more limited travel restrictions on 7 others, reintroducing a controversial immigration policy that came to define the early days of his first term. The ban will completely bar travel, and bar, I'm assuming, just means ban. Yo, why is my thing so laggy? Prohibit officially block. Okay, so yeah, forbid entry. Citizens from an additional list of countries will be barred from permanently immigrating to the United States, along with applying for tourist and student visas. Those countries are Burundi, Cuba, Laos, Sierra Leone, Togo, Venezuela. So I know that there's these bans on the 12, I guess a bar on these 12 countries and restrictions on these 7 countries, but I want to know why he did this. The ban, which the White House said would go in effect on Monday, only applies to people outside the United States, though anyone currently in the country who leaves could get stuck abroad as a result of it. Wow. And it also excludes any nationals of these countries who hold green cards, along with someone traveling to the United States for major sporting events, including the World Cup in 2026 and the Olympics in 2028. Afghans who receive special immigrant visas, a visa reserved for Afghans who worked alongside are also exempt. The administration justified the restrictions in a number of ways. Several of the countries it said had unacceptably high temporary visa overstay rates, necessitating a ban. Others, it said, couldn't be relied upon to issue valid passports to verify a person's identity. Haiti, the only country in the Western Hemisphere to face a complete ban, was included because hundreds of thousands of illegal Haitian aliens flooded into the United States during the Biden administration. So the recent attack in Boulder, Colorado underscored dangers posed to the country. Mohammed Sabri Suleiman, the suspect in the flamethrower attack, was in the United States from Egypt on an expired visa. The Department of Homeland Security said having entered the country in August 2020 with the B2 visa, that visa typically used for tourism, expired in February 2023. Egypt wasn't on the list of banned countries. Why is that? I don't know. Trump in the video said the list is subject to revision. Very simply, we cannot have open migration from any country where we cannot safely and reliably vet and screen those who seek to enter the United States, he said. My God, what a misfortune we've had to suffer, said Nurica Melendez, a Venezuelan who heads the advocacy group Venezuelans and Immigrants Aid in New York. This is another terrible blow against our people. I mean, wow. You're running a business. I can see why this is not good for you, but I mean, not allowing people to even visit their family is terrible. Venezuelans who hope to join loved ones in the United States will now see their plans dashed, along with those simply hoping to visit or study in the American colleges. She blamed the Venezuelan government for failing to issue official documents, from passports to identification cards, leaving citizens unable to prove their identity. The ban stops Cuban academics and students from attending U.S. colleges. It also bars a small but influential group of entrepreneurs and intellectuals who had previously been encouraged to visit the United States in the support of their work on the island, said Augusto Maxwell, chair of Ackerman's LLP, Limited Liability Partnership, Cuba practice in Miami. Banning a group of people because you disagree with the structure or function of their government not only lays blame in the wrong place, but it creates a dangerous precedent. So he's banning people from coming inside the United States due to the fact that that there's not enough information about their identity and there's not enough proof. Further, banning people fleeing dangerous countries like Afghanistan, a country where many people are in danger due to their work assisting the United States military, the Congo, Haiti, Sudan, will only further destabilize global security. Chapaya Jayapa posted on X. Mohammed Hassan, who heads the Darfur Network for Human Rights, a Sudanese advocacy group, said the ban was yet another indication of Trump is inconsiderate of the suffering in Sudan, which has been engulfed. And I think that's pretty much all I really want to just know from there. Trump spoke with Z. Chinese media says trade deficit shrinks. Oh, look at this. U.S. trade deficit shrank in States. I think this was it. Yeah, so last month the trade deficit was 138 billion. It's now to a negative 61 billion, but this is due to the tariffs. People don't want to spend a lot of money, so they're not buying from other countries due to the tariffs. The U.S. trade deficit declined in April as a barrage of steep new tariffs muted the rush of imports that had preceded the new trade barriers. The U.S. imports fell 16% versus March to 351 billion in April, while exports rose. The gap ballooned to a record in. This is due to the gap had ballooned to a record in March, and this is probably due to the front loading. Imports of consumer goods fell 33 billion in April, led by a sharp decline in pharmaceutical imports, showing initial effect of this big step up in tariffs the White House enacted in early April. But the path forward is less clear. Companies had hustled to bring goods onshore before the tariffs hit. So April's data, it reflected the idea that companies did front load a lot of things, so the trade deficit has to have grown. The uncertainty, however, in his policies could lead to slower growth as companies are going to wait to see for more clearance. They want to see for things here. So stock market today, China says Trump spoke with Z. Stocks open higher. Data shows steep pullback in trade deficit. Offering investors hope that the trade standoff could be resolved. Stocks were lower Thursday despite new data on trade imbalances and interest rate cut in Europe aiding market sentiment. The trade deficit, a key Trump issue, dropped to 61 billion, an even steeper drop than economists forecasted. It had ballooned to a record in March as businesses rushed to stockpile ahead of tariffs. A time in about a year, reflecting trade tensions, a stronger euro, and weaker inflation. The move, which was widely expected to benchmark borrowing costs in the Eurozone to 2%, widening a gap with the US, where the Federal Reserve has eased more cautiously. Alright, let's actually get into the technicals here. I'm sure this is what you guys are here for. So let's take a look at the daily candle here to begin today's analysis. So the daily candle today, or I guess previously, was a pretty, I would say it's indecisive. It's an indecisive candle. Notice this was where we closed yesterday, right? That purple line is where we closed, and so that's Wednesday's closure. Tuesday's high of day was where that red line is, and whenever there's a fair value gap that gets created, right? It's a 3-candle pattern, the first candle being on, so this was Wednesday, Tuesday, so this was on Monday, Tuesday, and then Wednesday. And notice how we created this fair value gap right here. So with the way that we created this fair value gap, right, I was anticipating for prices to rebalance this inefficiency here. We could rebalance into it. It's not that we should, but we could. Mistake me if I was wrong. I think I said the wrong word. But yeah, the reason why I believed that we could rebalance into this daily fair value gap was the fact that yesterday's closure, this purple line, was below the red line, right? This whole concept of the third candle closing below the second candle's high in a busy, so this fair value gap is known as a busy. The fact that we closed below the second candle's high on the third candle means that we could rebalance into an inefficiency, right? This idea is kind of how I know when a fair value gap is going to be rebalanced or not, or when a fair value gap should be treated as a breakaway gap. I'm sure ICT, he doesn't really go into too much context of how or when fair value gaps should be treated as a breakaway gap, and this is how I interpret breakaway gaps, right? So the fact that we, like I said, the fact that we closed below the second candle's high on the third candle means to me that we could rebalance into the inefficiency. However, could is a very it's not definite language, right? There's a possibility of us rebalancing into the fair value gap. However, like today, sometimes we are not going to follow that concept to the T. And so here, as you guys may notice, this coming into the London session, we expanded higher towards the daily high, which is right here. Took out the daily high, and yeah, so we took out the daily high during London. Once again, at the 8 o'clock open, we took out another high, and I'm just gonna go backtrack here. But yeah, so the daily objective, I mean, not really objective, but the daily candles high did get taken, so I'm not going to rely, coming into the morning, I'm not going to rely on the daily time frame. I can't use that time frame for a bias. And so I would rely on how we close here on the hourly time frame and the 8-hour time frame. So depending on how this candle closes and how this candle closes will give me a morning objective, right? Every single candle has an objective. Whether if this 8-hour candle closes bearishly, then my goal, where I want to see prices go, is towards this, towards the low here. And yeah, that would be my morning objective. So depending on how we close on the 8-hour time frame and the 4-hour time frame will give me an objective for the morning. One thing that I do want to mention is that, look, so this is the monthly candle from last month, right? And we created a bullish monthly candle. And so coming into June, this current month, I was anticipating for us to take out May's high of the month. And so sometime this month, I was anticipating for us to take out the monthly high, the previous monthly high. It's just when we should take out that monthly high is kind of determined by the lower time frames. And as you guys may see, we did end up taking out the monthly objective here. So here you guys can see that we did pass that line. We took out that liquidity. And I do want to take a look at ES as well. So did ES take out the monthly high? So we did take out the monthly high here on ES, which is good, because the fact that we did take out the monthly high on ES means that there's no SMT. So ES actually caught up with NQ. And yeah, so the monthly time frame, we have completed the objective on ES and NQ both. And yeah, I mean, that's pretty much all I have as of the morning. Let's go back to the 4-hour time frame to kind of get a better understanding of where prices wants to go here. And it looks like to me that we're going to probably take out this 4-hour low, because notice how this 4-hour candle here, it's closing bearish. The next 4-hour candle, we should work towards this 4-hour low. And I do want to see if, okay, so that's interesting. So there is the 4-hour open, and here I'm gonna watch if NQ is going to draw towards that 4-hour low. Pretty interesting, like, it's interesting where we are right now in prices. Lower prices, like I said, is my target here coming into the morning. I want to see us take out the 4-hour low and the 8-hour low. So simply based on how we closed here on these two time frames, they're giving me a objective, right, for where I want to see prices. Just lower prices here. And yeah, I mean, it's pretty much all I have for the technicals as of right now. Yeah, so morning objective, 4-hour low, 8-hour low. And it seems that the hourly low and the 30-minute low and the 15-minute low, they have the same low as the 4-hour / 8-hour low. However, on the 15-minute time frame, it's not really clear to me if we're going to take out the 15-minute low or not. However, with the way that we're looking here on the 30-minute time frame and the hourly time frame, it is suggesting that we should continue lower. It's just, I kind of, even with the higher time, even though I know, or even if I have an idea of where prices wants to go, it's not, I can't take or force a setup to happen or a trade to happen if I don't have a model to align with the higher time frame drop liquidity. So yeah, here I'm just gonna go over there it is. I was trying to find my trading journal. I was like, where is it at? But yeah, here I'm just gonna go over some pros and cons here with you guys, just to do a little quick recap. Alright, so for the pros and cons here from previous week and what I should just review and kind of carry on to this week. The first pro is to continue to take consistent setups, right? And the only way that I can be consistent is with my approach. I required 3 components, 3 principles in my setup, which is the higher time frame objective. So for this morning, it would be that 4-hour low, right? That's the higher time frame objective. I'm seeking lower prices. A model, I don't essentially have a model, which is why I'm not taking a trade. But higher time frame objective, a model, and the entry pattern. Those 3 things are the most crucial aspects of my trade, right? There are the 3 things that I look for in my setup, and requiring these 3 things and being able to identify those 3 things before I even press the button allows me to be consistent, or not even allows me, but forces me to be consistent. And yeah, so that's the first thing. Second, utilizing a model to align myself with the higher time frame objective. So even if I have a general idea of where prices wants to go on the higher time frame, I need a model on the lower time frames that aligns with the higher time frame order flow. So for instance, this morning, even though the 30-minute time frame here, this 30-minute candle is suggesting to me that, hey, we should take out this 30-minute candle low, I don't have a model on the 15-minute time frame. So notice how I went from the higher time frame, 30-minute, onto the lower time frames, the 15-minute. I don't have a time frame, or I don't have a model on the 15-minute time frame that aligns with the 30-minute order flow, which is lower prices, right? And so I can't force myself to press the button here. Sometimes you're going to have an understanding of where prices wants to go on the higher time frames, but if you don't have a model, then there's no trade, there's no setup. And another aspect of utilizing higher time frame and going onto the lower time frame is that you have to read 1 page at a time. What I mean by this is that you can't go from the weekly time frame onto the 1-minute time frame. You can't go from the 4-hour straight to the 1-minute time frame, right? There is no correlation between the weekly and the 1 minute. It's not proportionate, right? Imagine that's like reading page 1 and skipping all the way to page 50, thinking that you're going to know what happened. The amount of information that you're going to miss out on due to the fact that you skipped 49 pages worth of information is not ideal, right? You're not going to have an understanding of what occurred in those 49 pages, whether some new characters might have been introduced, new plot, and yeah, so you want to go from, for instance, you could go from a 4-hour higher time frame objective onto maybe the hourly as your model, and your entry pattern could be on the 15-minute. Another example could be your higher time frame objective could be the hourly. Your model could be on the 15-minute time frame, and your entry pattern could be on the 1-minute time frame. That's reading from page 1 to page 2 to page 3, not skipping all the way from page 1 all the way to page 50, right? So that's the second pro. The third pro is to utilize SMT. Utilize SMT before a trade and during a trade. The whole idea is that a lack of SMT indicates that there is a possible continuation, and if there is SMT, then you're let's see, if there's SMT, then there's a possible reversal, meaning prices could reverse in an opposite direction, right? In the opposite direction. So utilize SMT to your advantage during a trade. If ES takes out a high that's relative to the high that you're targeting on NQ, and NQ didn't take out that high yet, then you're going to want to move stops to break even in order to prevent any unnecessary losses, right? And you also want yeah, I guess that's it for the SMT right now. It's a little bit better for me to explain SMT whenever I am in a trade, or if there's an example for me to kind of show you guys. But yeah, so the last pro here is to know when to pivot. So like today, where I was mentioning how the monthly objective has been completed. So the monthly objective was that monthly high based off of the bullish closure. The weekly high has been taken, so I can't utilize the monthly and the weekly. And I also mentioned that the daily high also was taken. So due to the fact that all of these objectives has been completed, the only way for me to approach this morning is to pivot onto the lower time frames, such as the intraday time frames, the 4-hour, 6-hour, 8-hour, 10-hour, and even utilizing the hourly, the 30-minute, and the 15-minute. So knowing when to pivot, every single candle has an objective. Utilize that to your advantage, right? And one thing that I also want to mention is that 1 hour objective, 1 hour structure doesn't allow you to target weekly objective, right? That's like an hourly objective has its own like frame of time. Weekly has, there's in a weekly candle there's 7 days, 1 week. It's a lot more hours in comparison to a 1 hour candle where it only takes 1 hour to create. And the whole idea is that it kind of goes back to the second pro, where you want to read one page at a time. Oh yeah, bye man. Hourly isn't proportionate to the weekly, so you kind of have to understand what you're targeting, right? You can't shoot for the stars based off of the 1 minute time frame. You can't shoot for, like, going on the 1 minute time frame. Let's just say here's a 1 minute fair value gap. I'm not going to enter this 1 minute fair value gap and target the yearly low, right? Yearly low would require for me to like go all the way down to like the 16,000 point, right? Which is not realistic. So essentially what this means is just to be realistic with your objective. Your objective is going to be given to you depending on the time frame of that objective. And so some things I can work on just to be is for me to be active. I have to recognize that every single 15-minute interval presents a new objective, right? Every single 15 minutes, there's a new 15-minute candle closure. And with a 15-minute candle closure presents a 15-minute objective. So I want to utilize that to my advantage and be present for those new objectives that could possibly lead to a trade. And yeah, so that's some of the things I can work on. That is one thing that I can work on. And comparison analysis, this is a little bit different. But yeah, so to move on to the improvements here for this week. Improvements is essentially a summary of the pros and cons. But the first improvement is for me to continue to take consistent setups. For me to continue to require those 3 components that I always look for, which is the higher time frame objective, the model, and the entry pattern. Those 3 components allows me to be consistent. It forces me to be consistent, right? I have to identify those 3 components before I even press the button. And yeah, second, if there is no model for me to align myself with the higher time frame objective, there is no trade. I have to find a model that aligns with the higher time frame objective in order for me to take a trade. Third, utilize SMT before and after, or not after, but before and during a trade. Before, if there is SMT, then I might consider not taking it at all or taking a smaller position. And if there's lack of SMT before my trade, then that gives me the inclination. It gives me more of an incentive to take the trade, right? I'm more confident in that trade if there is a lack of SMT. And utilizing SMT during a trade means that if there's SMT, if ES takes out a high when NQ didn't take out a high during my trade, then I'm going to move my stops to break even, right? Very simple approach. With that, that's going to be all for my pros and cons here for this week. And yeah, like I said, I'm still favoring lower prices here. I want to see us take out that 4-hour low, which is that red line. And yeah, so to end off today's stream, I do want to go over maybe one trade here with you guys. Let's go do this one. So as I'm looking at this, I recognize that there is a dealing range here, it seems like. So from this 12-hour high to this 12-hour swing low, there is a dealing range. And with the way that we closed here on this daily time frame, I noticed that, hey, this daily candle is bullish. In the next daily candle, I am anticipating for prices to take out this daily swing high. So that means that I am bullish, right? However, let's take a look at this dealing range again, right? We haven't had the chance to trade up into the premium of this dealing range yet. So there is room between the daily high and up into this premium level of where prices could continue to climb higher. And so my higher time frame objective is for us to retrace back into the premium of this dealing range, and this daily candle aligns with that objective, right? And so here, after the whole idea is that we should take out the daily high. After we take out the daily high, we should expand. We should continue to expand higher towards the premium of this dealing range to allow the sellers to sell, right? Sellers are going to want to sell in premium. So if they have the chance to sell in premium, that's good. And that's the higher time frame objective and model. And so the only thing left is an entry pattern. So how can I align myself with this order flow here? Or not align myself with, but how can I enter into this trade? So I noticed that there is a 10-hour fair value gap. And this fair value gap specifically suggests the idea of, or it supports the idea of higher prices. So once we trade, or once we rebalance into this fair value gap, we should respect it. And so I have my entry pattern at the 10 o'clock or the 10-hour fair value gap here. And so here you guys are. You guys can see that prices trades into this fair value gap. We rebalance it, and we should respect it because the daily candle is suggesting higher prices already. We expanded towards the daily high, and we continue to expand towards the premium of the dealing range. This is literally everything that I'm looking for in a trade, right? There's a fair value gap that supports the model. The model is aligned with the higher time frame objective, all of which supports the idea of higher prices. And one thing that I also want to mention is that notice how this 4-hour candle closes and this 8-hour candle closes during the morning of March 25th. It suggests higher prices. So while I'm in this trade, I noticed that this 4-hour candle and this 8-hour candle is suggesting higher prices. So it gives me a inclination to continue to hold for higher prices. And so I move my stop loss to break even after we take out the daily high, and I allow prices to continue to do its thing and expand towards the premium of the dealing range. And this is, like I said, everything that I look for in a trade. The fact that I'm able to identify those three components before even pressing the button is crucial to me being consistent. And yeah, so that's going to be all for the pros and cons. And I did a review. To leave you guys with, I'm going to leave you guys with the fact that, like I said, I want to see prices take out this 8-hour low here. The best sells whenever you're in whenever you're in bearish order flow is you want to be a seller above the open, which is the open of the 4-hour and the 8-hour candle is this red line. So anywhere above this red line where you're selling is and could be and would be considered premium, right? Essentially. Think of it in terms of power of 3. Every single candle, a down close candle would be open, high, low, close. So your best sells are going to be anywhere in this green box or near the open, and vice versa. You can apply the same concept to whenever you're in a bullish candle. And yeah, so that's going to wrap it up for today's live stream. I left you guys with a morning objective. If we begin to shift on the lower time frames, meaning if the hourly candle closes bullish, then I'm going to kind of have to pivot. But yeah, thank you guys so much for tuning into today's live stream.